Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and today's Thursday, May 29th. Well, the market was pretty impressive today, but you know, if we didn't have these little ugly looking little formations sitting on top of us, it would be very easy to kind of fall in love with this rally, because the rally was quite impressive. It was very resilient and it just wouldn't give up all day. But we're going to take a look at these ugly formations, and I'm going to make some comparisons. Tonight's video is about comparisons. And I'm going to show you these formations, and I'm going to show you what happened the last time we had similar formations. I'm going to let you make up your own mind. And also I have a comparison even on our new pick. I'm going to compare the bottoming formation to the topping formation. It's very interesting. So after we look at our new pick, we'll take a look at the stock we bought this morning, Smith & Wesson. It's shaping up pretty nice, and I think that's going to work out real well for us. But without further ado, I have a new idea tomorrow, and the idea is CELL, Brightpoint Corporation. In just a moment, I'm going to show you the chart. I'll show you how we're going to take this idea and turn it into some money. Now, don't go away. I'll be right back. Okay, we're looking at a daily bar chart of CELL. That's a better picture. Okay, let me give you the stats, and then I'll zoom in a little bit. This is a call on the long side. We've been looking to buy this stock around $9.70 to $9.90. It closed at $9.87. My initial target is $13.50 right in here. This formation here we think will stop it on the first trip up, but eventually it'll probably go through after some backing and filling. Okay, I want to show you some comparisons here. I'm going to compare this bottom to this top and how similar they are, only in reverse. This top is to this bottom. This sell-off is to this initial rally. This kickback into resistance is to this sell-off back into support. This breakdown and making a lower low is to this rally making a higher high. This kickback is to this pullback. This break new low area is to this new high. This kickback is to this sell-off, and then bang, bang, bang. And we expect this to break out and move up. So I just thought it was very interesting how they look a little different, but they're not. They're almost exactly the same in reverse. It's a mirror image. Many times stocks will go back up the other side of the formation, looking almost like the way they did coming down. You could almost fold them over on each other. And I'm not exactly sure why that happens. I guess it's all the same players doing things in reverse, maybe. But I just wanted to point that out to you, how similar this bottom is to that top. Okay, let me show you what I really like about this. I've already showed you most of it. I'm going to zoom out. I want to point out how important this little bottom formation is. I pointed a similar formation like that out in yesterday's video. It looked a little bigger than that, but the key day here is it's all about this one little key day. It's this top right here, the top of this little head. This is like a reverse head and shoulders pattern, left shoulder, right shoulder, and the head. Now as it comes back down, this top of this day is so important that even though it penetrates it, it never closes below that day. So that's a key support day. So we have a breakout, we have a pullback, we have a breakout, we have a pullback, we have a breakout, we have a pullback, and now we expect a pretty good breakout. So let me recap that. That's CELL, it's a call on the long side, and I think we can make almost $4 on that trade. Now let's take a look at Smith & Wesson. I bought it this morning, early this morning. I didn't wait around for anybody to push it higher on me. I grabbed some right away. I bought some at 563. I knew I liked it at around the 562 area. I'm going to zoom in, and the reason I liked it was that day right there, the top of that day. That's 562. Anyway, this pattern is shaping up pretty nicely. What I'm looking for is this pattern to start taking on the look of this pattern over here. And so far it already is. I don't know if you can see this. I'll zoom in one more time. This reversal day here with the closing on the high, it's an outside reversal day, meaning it's a lower low than the day before and a higher high with a closing high, is to this exact day here, although we didn't get an exact close on the high, but it is a reversal day. And that's when I saw that, I figured this stock had seen its bottom and was ready to be bought. Okay, we'll put that into our portfolio, and hopefully in a week or two we'll get it up to around $10 a share, and we'll be selling it. All right, let's take a look at some of the major indexes, because this is where I want to make the comparisons. I'm going to show you patterns that happened in the past that look almost exactly as if like the pattern we got that we're dealing with right now, and I'm going to show you what happened the last time we've had these similar patterns. Okay, this is the New York Stock Exchange Index, and this is the pattern I'm talking about. This latest toppy pattern that we put in here, okay, looks just like this pattern over here. And we had our initial break, we had our kickback rally, and then what was behind the kickback rally was a pretty severe sell-off. And that's exactly what I think we're into right here. Now we're going to rally back. The hard part is I don't know exactly how high these rallies want to go. This rally rallied almost right up to the top of it, but you'll see in other comparisons where they fell short of the top. They stopped down in here. It's hard to say exactly how high they're going to rally, but they never go higher than the head here. They rally up into this, and then behind it is a bad break like this. So this top is to this top. This rally is to what we're into right now. I don't know how long it's going to last, how many days. I do know it's going to get up into here maybe, but what's behind it is what's important. Let's take a look at the S&P 500. Here's that top again. This is what we're dealing with right now. This is our current top that we're dealing with, and here's one in the past. You can see the break, the kickback. Now this one fell very short of the old high area. It got into here, but nevertheless we still got the bad break behind it. So this rally here that we're into right now is to this rally, and what's behind it is what we're anticipating. Once the rally is over, we think we're going to get something like this. At least I do. Okay, this is the S&P, the SPOOs. Here's our current top. Here's one in the past. Initial break, the kickback rally, and then gabango. So this rally that we're into right now is related to this rally here. The QQQs, there's that top, that head sticking up. Now we're pretty far up into the pattern, so this probably looks like it's getting close to ending. And now let's take a look at the Standard & Poor's 500. There's that formation we're dealing with, and there's the old one. And you see, kick back and then bang. And that's what we're anticipating. I don't know exactly how many more days the rally is going to last, but what I'm concerned about is what lies behind it. Now we're going to look at the Dow Jones averages, and they're a little different but similar, because there was the initial pattern, there was the initial break, there was your kickback rally into that little tiny pattern, and then a bigger break. And now we're kicking back again, and we're getting into this resistance area, which is right here. I pointed out it's amazing how we actually got right to it today before we rolled over for a little bit. Anyway, those are the comparisons I wanted to make. I thought it was very interesting, and that's what technical analysis is all about. It's what happened the last time we had a setup like this, and that's what I wanted to show you. So that's why it's hard to fall in love with these rallies. Even though they were really good looking, you need to be cautious. You can't go be buying any old stock. You need to know what you're buying, because it all depends on where they are in that context of their picture. Okay, so that's my view of the market. Until tomorrow, this is TK signing off.